Hi, it's Lee and welcome to the Tesla Economist. Supply and demand. If prices reduce, demand increases. Now, bear with me through this one, as there are a few numbers to go through to illustrate what I think is a very important point that I'll get to in the end and how Tesla's demand is still so strong. Autos are an inelastic good. When prices drop, demand increases relatively higher, e.g. a 10% price drop might mean that demand increases 20%, whereas products like oil, cigarettes or liquor raise their prices, demand somewhat remains. If gas prices get higher, people don't say, oh well, I guess I can't afford to drive to work today, and people don't quit smoking because their cigarettes cost more. Instead they cut back elsewhere. These are inelastic goods. Now, Tesla is a highly coveted car that many people want, and all these people are struggling too. They also seem angry at me even at times, because the Tesla is too expensive for them, although they tend to always be referring to the Model Y long range. I'm not sure why they think that they're too good for a Model 3 rear-wheel drive. It's a fantastic car. But either way, it's a bit conflicting for them. They're angry at a company for making a product that they love so much and that so many other people also love that the price had to rise to, again, adjust for supply and demand. As when demand increases, prices rise. This is usually offset by competition entering the market, but no one else can make Teslas. But it seems that with what is happening in the economy right now, perhaps demand for high-end luxury vehicles, for lack of a better word, although I'm not entirely sure I class Tesla in that segment per se, they just seem to have been placed there by offering exceptional cars that utilize great technology, but this technology also reduces the cost of ownership. Therefore, in reality, at least with an educated population, that could require some more education to the new car buyer market, but at least for an educated, rational consumer, it is the cost of ownership that matters the most when buying a car. And as Tesla's cost of ownership is already much lower than equivalent ICE, any reduction in cost is a much higher percentage of reduction in cost of ownership when compared to an ICE. You see, if Tesla and an ICE vehicle both cost $50,000, and the Tesla saves you $8,000 on fuel over a 6-year period, then that would mean that the Tesla is $42,000 equivalent. Then we have other costs like servicing and engine maintenance. So perhaps the total cost saving is $10,000 from the Tesla, although that is how much it would save you over 6 years. We'd need to discount that back. So perhaps the net present value is closer to a $7,500 saving. Therefore, if both cars drop 10% in price, then when we remove the net present value of savings to factor in that electric is a lower cost vehicle to run, then if both vehicles dropped in price by 10% off the sticker price, i.e. $5,000, then that price would affect the cost of the Tesla almost 12% compared to the ICE at still 10%. However, this is only factoring in the cost savings from Tesla's savings in fuel and servicing. There are other savings like insurance, at least eventually, but the biggest cost when you buy any car is always going to be depreciation. So sticking with our 6-year ownership, let's estimate how much an equivalent ICE car will depreciate. As we're using a $50,000 price tag, we'll assume that this is a Model 3 Tesla, and the equivalent ICE would likely be something like a BMW 3 Series. A standard BMW 330 is $45,000 new and $25,000 used after 5 years. So we'll say it has lost $20,000 over 6 years of ownership. Whereas a 5-year-old Model 3 Tesla is still selling for $40,000, and they're $47,000 new now. Although this is a 5-year-old one, so it possibly cost even less than $40,000 initially. So how about we say $10,000 depreciation if it was 6 years old? However, again, we need to take the net present value of that. So let's say the difference is $7,500 in depreciation. When we factor depreciation in, then we can see that it's actually a 16% price reduction in cost compared to the equivalent ICE. But perhaps these numbers aren't representing what's really happening here, as the prices are somewhat arbitrary. How about we actually see what proportion of the cost of ownership a 10% price drop would actually mean? Alright, so let's calculate the cost of ownership of both cars. A Tesla doesn't cost nothing to run, it still needs to be charged, and we'll just use the average figures, and admittedly somewhat ignoring all these crazy energy prices that's happening in the world right now that should be resolved in the medium term. Either way, they won't affect depreciation. But this shows that if Tesla dropped their prices by 10%, then it reduces the cost of owning a Tesla by 30%. However, it only reduces the cost of owning an ICE by 13%. That's 2.5 times a bigger cost of ownership drop for the same price drop. Sure, there are other elements in here like tyres, but I think this is close enough for the numbers to be indicative enough to make my point. Of course, the real issue for ICE is that they can't drop their prices by $5,000 in the first place, as that would mean they lose possibly about $5,000 per vehicle. And if they make 4 million of them a year, that's a $20 billion loss a year. Whereas Tesla can drop their prices by that much and still make a really good profit. Yes, sure, you can argue that most consumers do not factor all of this in, and their buying decision may not factor all of this, but it doesn't stop it being true, and more consumer knowledge grows, especially when they start by looking at a used Tesla, only to realise it's not much cheaper than a brand new one, and instantly it's quite easy for them to realise that a Tesla holds its value very well. But it's already baked into the demand somewhat anyway. There's already the buyer preconception that Teslas, or even EVs in general, offer more value than ICE, on top of being a superior way to power a vehicle, and then Tesla being a super cool, smart vehicle that can drive itself. Therefore, Tesla does have this much more pent-up demand, and if it did drop prices down to certain price points, there's a much larger pool of potential buyers when Tesla's price drops, relative to the equivalent ICE car dropping the same price. Just to illustrate further what I'm saying here with some indicative numbers, if Tesla dropped their price by 10% or $5,000, then their demand might increase as much as 50%, whereas BMW's demand may only increase 20%. I guess another way to put this is, like for like, consumers are simply willing to pay more for a Tesla than an ICE vehicle like for like. So perhaps consumers that are willing to pay or can afford $35,000 for an ICE car, the same consumer is willing to pay maybe $45,000 for a Tesla. So Tesla simply has a much larger consumer pool due to them being more affordable and more desirable. Of course, the affordability itself further increases desirability too. And when I go ahead and say things like, Model 3 is the equivalent cost of owning a $25,000 ICE car, people always freak out in the comments, but that's my point. Now check this table with the cost of owning a $25,000 ICE car, and we'll drop down the fuel consumption and servicing costs as we would expect a $25,000 vehicle to be more fuel efficient. Same with depreciation and insurance. Except it's not, is it? It still ends up being $6,000 more expensive to own an ICE vehicle, about half the price of a Tesla. As long as a consumer has the additional $20,000 or so difference in capital to invest in a Tesla over an ICE car, it is more affordable to own the Tesla, as that $20,000 difference in price saves you $6,000 over 6 years, which is still a great return on $20,000. Oh, and let's not forget, you get to drive a Tesla rather than a $25,000 ICE car, which wouldn't be a great car and nothing compared to a Tesla. And on top of that, eventually if Tesla start adding lower cost variants or models, they're going to be competing with more used car buyers too, like myself. I would have never considered buying a brand new car in the past because of depreciation. One of the main reasons I bought a new car this time, which incidentally was more than twice I'd ever paid for a car before, was that it was still going to be one of the lowest cost cars I ever bought too, due to the depreciation being minimal, although admittedly there was the extra capital involved too. But the equivalent I saved is still a better return than leaving said capital getting interest in the bank. If Tesla could find a way to offer these consumers with lower budgets a way to obtain that additional $20,000 to get in the Tesla market in the first place, when compared to just buying a $25,000 ICE vehicle, which is why I have in the past mentioned a potential 10-year financing rate for Tesla buyers, then it could increase demand to another level again. But I guess Tesla neither need nor want that much demand yet. I love performance cars, and any car with any half-decent performance needs a larger engine. Where I live, gas is not so cheap. My last car was costing me about 7,000 New Zealand dollars a year just on gas. Then obviously it cost a bit to service too. So if I keep my Tesla for just a few years, the fuel savings alone would cover the entire depreciation, let alone the discrepancy between the depreciation I would have incurred with an ICE car. This is why Tesla is such a good company to invest in, because their product is just on a totally different level from the equivalent versions of transport This is, as the great economist Joseph Schumpeter put it, creative destruction at its finest. Also factor in that Tesla are going to keep reducing their costs of building these vehicles with improved production techniques, more vertical integration, removing parts and processes, economies of scale, improved technology, meaning that Tesla can afford to pass on some of these savings to the consumer, which then mean Tesla will sell more vehicles, further improving economies of scale, justifying more vertical integration, etc., etc. Not to mention cost savings with their own energy products and potential bots replacing human labour. It leaves Tesla so much more room to lower prices and tapping into these massive pools of consumers that want a Tesla but can't yet afford one. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.